Hi friends, so very recently our beloved Malaysian Prime Minister Dato Sri Anwar Ibrahim just visited China, where he successfully secured 170 billion ringgit worth of foreign direct investment commitment from the country. But the main reason why you're probably here is for the fact that he brought up the idea of setting up the Asian Monetary Fund, the AMF, again in order to be less dependent on the US dollar. And of course, me being a Malaysian and at the same time investing in the US stock market, which I think most of you watching here can relate, you must be wondering, what on earth is happening? Is this the beginning of the end for the US dollar, and how will it affect us Malaysians? Well, I've done my research and I will share with you my findings and why I think that this could be a threat to the US dollar's position as the global reserve currency. But at the same time, it's not something as alarming as people think it would be. Allow me to explain more. Let's take a step back and unwind what just happened. So we all know COVID-19 happened and the central banks all over the world had to reduce interest rates in order to stop the economy from coming to a halt back in 2020. And that actually reversed the crisis and turned it into a bull market for 2020 and 2021. Because there were too much additional liquidity or free money being injected into the system, and particularly the United States. So because of that, inflation of prices happened. The US hit a 40-year high inflation of 9.1% in June 2022, and the US Federal Reserve, or their central bank, had no choice but to hike interest rates aggressively from a near 0% back in March 2022 to now almost 5% in March 2023. A whole 500 basis points of interest rate hike that was so aggressive that it caused the US dollars to strengthen so much, because higher interest rates would usually mean higher bond yield, higher fixed deposit rates, etc. Simple question to you: if the United States is paying about 4% of FD while Malaysia is paying 1% FD, you would move your money towards US dollar, right? Yep. That's essentially what happened in the past 1 year. And of course, that all came at the expense of the non-US dollar currencies. Emerging markets like China, Brazil, and Malaysia, for example, simply cannot afford to match the pace of rate hikes by the US without causing too much damage to their own economy. Take our Malaysian ringgit for instance. At its peak, it has lost over 15% of its value from the start of COVID-19, or about 8% in total up to the point of the recording of this video. And a weaker ringgit will definitely result in 1. Inflation of prices and higher cost of living for us Malaysians, because imported goods become more expensive. And 2. Businesses that rely on imports will have higher costs and hence lower profit margins. And number 3. Our country will be less attractive to foreign investors as they get lesser return as compared to investing in other countries, like the example I just gave you. And number 4. Weaker ringgit also means you and I will need to spend more in order to exchange for foreign currencies. So our overall purchasing power will reduce as well. And in comparison, our neighbour's Singaporean dollar barely lost about 2% of its value towards the US dollar, which is almost negligible at the large scale of things. But of course, I'm totally simplifying things. Singapore run on an exchange rate based economy because they rely heavily on international trades. So it's not really an apple to apples comparison, but you get my point. You can just pull out any chart of the other currencies like the Japanese yen or Indonesian rupiah against the US dollar and you will see what I mean. So rightfully, as the newly appointed Malaysian Prime Minister, Dato Sri Anwar Ibrahim had revived the idea of the Asian Monetary Fund, AMF again, which could challenge the position of the existing International Monetary Fund, IMF. I'm sure by now you must be wondering, IMF and AMF? What's the difference? Well, here I have for you a very simple table simplifying the high-level terms you need to know. Do note that whatever that I've written down on the AMF column on the right-hand side are all outdated proposed terms and numbers, because this AMF proposal is not something new at all. It was first proposed by the Japanese in the mid-2000s after the 1997 Asian financial crisis, but ultimately didn't go through due to political reasons, which I will talk about in just a minute. And basically, the IMF that we have today is a global institution with 190 member countries, which was set up to promote international trade, cooperation, and provide assistance during a crisis. Basically, a universal fund for the entire world. And as of today, it has a lending capacity of $1 trillion and have been the saving grace for many countries when they face crises during COVID. But the caveat here is the United States remain the largest member with the highest voting power, with Japan and China coming in next at about 6% only. So I think in some way you can say that it is somewhat controlled by the US. There are of course critics saying that the IMF is not suitable for Asia because they applied the same policies that they applied to developed nations like the US and European countries onto Asia's developing nations, and that was one of the reasons why the IMF worsened the Asian financial crisis back in 1997. And the AMF, however, on the other hand, is a proposed $100 billion fund only for Asian countries that was meant to provide financial assistance during times of crisis only. And while we don't have the full picture of how the fund works and who benefits the most, etc., you can assume it to be somewhat controlled by the country with the largest GDP or gross domestic product numbers in the Asia continent, i.e. China, and followed by countries like Japan, South Korea, India, etc. Now, before we even think of what's next for the AMF, I think it's worth understanding why the AMF didn't go through the last time, and I will also share with you why I think it may very well not go through also this time. And according to this report from the Asian Development Bank Institute, there are two main reasons to it. Firstly, Japan and China's relationship goes a long way back in history. The two largest Asian powers were always rivals to each other, predominantly in the way they wanted to rule the region. And even the most recent report by Bloomberg have stated that Japan has decided to join the US and Netherlands, two of the largest chip maker or chip making countries, in banning exports of chip making equipments to China. So if the two largest forces don't agree with each other, you can only imagine how hard or how long it will take before we even come close to the so-called Asian Monetary Fund from being formed. And on top of that, the Asian countries as a whole were always competitive with one another. There have been territorial disputes where some Asian countries are trying to claim different parts of the South China Sea for the fishing rights and also, of course, oil and gas resources. And then there's also economic competition in the field of manufacturing and agriculture like rice and palm oil, two of the biggest staples of Malaysia, and also foreign direct investments, etc. And don't even let me begin with the differences in culture and religion. That in itself just adds a whole new level of complexity to it. And the second factor why AMF failed back then was due to the lack of support from the United States, as well as the high dependency of the global market towards the US dollar, just like today. I mean, this is pretty obvious. They will obviously want to retain their status as the world's reserve currency, as well as their influence on the Asian economies, right? And as a matter of fact, today, or 2021 to be specific, about 59% of the global foreign exchange reserve is still made up by the US dollar. Why? I mean, to list a few, international trades for commodities like oil, food, etc. are mostly denominated in US dollar. The largest financial markets are all in the US in the form of the New York Stock Exchange and the Nasdaq Exchange. Most mergers and acquisitions, M&As, for as long as I can remember, are all still done in US dollar. And just to give you the number, 90% of the global foreign exchange transactions in 2022 are still done in US dollar. The list goes on and on and on. So let's just assume Malaysia formed the Asian Monetary Fund with China and assume all other Asian countries agreed to the terms as well. What's the significance or big deal of it? Well, to begin with, Malaysia is a net exporter with China being their largest trading partner at about 15.5% of its total export, and the US falling behind at third place at about 11.5%. So economically, it's somewhat makes sense to side with your largest partner because they are the closest to you geographically and may benefit you the most, at least in the near term. And guess which leader just got appointed as the Malaysian PM and has a lot of pressure to show immediate results to the people in order to win the majority's vote? I'll leave that for you to figure it out. But remember, the US is also the third largest export market for Malaysia, especially for the electronics and chemical industry. So in my opinion, there is just no way for the country to just completely ditch the US dollar and just say, screw you US, we are Team China from now on. And if anything, it might be a small shift for certain trades which, yes, will negatively impact the US, but Malaysia having a GDP just shy of 400 billion US dollars, or about 15% of Apple's market cap, just for scale, is, in my opinion, nowhere close to making a dent towards the position of US dollar in the grand scheme of things. But that is of course Malaysia alone, and if for some miraculous reasons the other Asian countries suddenly agreed to join force in the Asian Monetary Fund, which in itself already will take a long time before we even get there, the shift away from the US dollar or the de-dollarization process will still be a very slow process. And based on this picture, it takes nearly 60 years for US share of global reserve currencies to drop from the 80% to the 60% level today. I mean, I'm no math expert, but I think you get my point here. So instead of looking at the AMF as the absolute replacement of the IMF and de-link from the US dollar, I think we can treat it as a complementary role to the already existing IMF. In my opinion, Malaysia as a country can definitely benefit from a few angles. Number one, regional financing during time of crisis. Yes, IMF does include Malaysia as one of their members, but getting money from IMF is not a simple one-step application process because it does come with several conditions to fulfill. So having this additional fund on standby is sort of an insurance policy for the country, if you will. And number two, with AMF, it comes with a more cohesive policy that will most likely integrate the various Asian countries together to have a strong economic cooperation. And back in February this year, Dato' Sri Anwar Ibrahim did give an example like each country focuses on a single type of vehicle, like Malaysia focus on building cars, while Indonesia and Thailand focus on buses and trucks. I mean, that's of course just one of the many examples out there. And whether or not the other Asian countries have similar mindset is a totally different story. And number three, less reliance on the US dollar, because the AMF could set up a regional platform that trades based on local currencies instead of transacting through the US dollars. And that will definitely benefit the Asian countries in terms of currency fluctuation risk and also reduce forex costs to do business. But all said and done, again, I believe this wouldn't be a simple process because it involves multiple countries, and in particular, superpower like Japan would find it hard to work with China without compromising. And even if Malaysia does successfully kickstart the AMF, that might also backfire the country in the form of IMF loosening certain supports, for example, financial assistance, access to international capital markets, etc. You never know because the US-China trade war is still ongoing, and the last thing we will want as a nation is to choose one side and then upset the other side, and then end up shooting ourselves in the foot. I am of course aware of the news on the 5 BRICS nation, the settlement of the first LNG trade in yuan between China and the Saudis, the Iraq Central Bank allowing trades to be settled in Chinese yuan, etc. Rest assured, I'm diving deep into those topics and hopefully I can address it in a separate video in the upcoming weeks, because I think to pile them into this video would be just a little bit too overwhelming for you to take it in all at once. So the ultimate question, will the AMF be one of the factors to end the US dollar dominance? Possibly, who am I to say no? But do I think the US dollar will die anytime soon? Hell no. No freaking way, at least for the next few decades. In the meantime, I would think everything will be just as usual, so there is no need to panic until we have more clarity on the AMF structure, terms, governance, etc. and then we'll look at it again. But for now, we are still far from that day, and there's really no urgency to push towards that agenda, at least not from other Asian countries that I can see. Of course, I'm no financial expert and far from being one. All I'm sharing here are merely my observations, my research findings, and my deductions only. I'll leave most of the research links for you to read down below in the pinned comment, so feel free to check it out. And while you're there, please feel free to check out the link to Interactive Brokers if you found this video insightful or at least gave you a head start in your research. Let me know what you think about this in the comments down below. I'm more than happy to see differing viewpoints on this subject. Thank you for watching, and I wish you a very nice day.